I'm Matt Bishar with NAREITWeek.com here in New York City for REITWeek 2015, NAREIT's Investor Forum. Joining me for this CEO Spotlight is David Henry, the CEO of Kimco Realty Corporation. David, thanks so much for joining us.
Always a pleasure.
So David, just 6 months left on the job for you. Can you give us a little insight as to how you and Conor Flynn are handling the process of the transition to the CEO role for him?
Well, I think we've tried to make it very easy for the market to start with. We announced that I would retire in February of this year, so that gave the market plenty of notice, and it leaves a nice transition time frame for both of us. We have worked together for more than 12 years. Conor's a terrific guy. He's worked his way up through the organization. He's a true walk-in-the-mud operating guy. So we started in leasing and property management and worked his way up into management, and has been our COO and then our president for a number of years. So he's more than ready to take the reins. I'll be 67 next year, and it's probably the right time for a CEO to hand the mantle over. And so I think it's going well, and it's being well received. And so, but I'll miss talking to you, and maybe I'll wander around the corridors and hope you'll grab me.
Excellent, of course. And Kimco continued its capital recycling program in the first half of this year, participating in nearly $2 billion in transactions in just the first quarter. Any signs of that transaction activity slowing down?
Yeah, we're coming to the tail end of the dispositions. We identified a number of properties, and we're about $4 billion through those properties now. There's another $350 million to go by year end, but by the end of the year, we think we'll have a run rate portfolio that we really like. These are all Class A assets in primary markets, and the disposition program will be largely ended by then.
And your last quarterly operating results reflect increases pretty much across the board and year over year. What's driving these performance gains?
The fundamentals of the neighborhood and community shopping center business are just very strong today. There's very little new building. The population is still growing, 3 million people a year, and the economy is growing. So you're seeing it in all of our vital signs: occupancy, rents, leasing spreads, renewals, and it's not only us, but our peers. So the fundamentals of our sector are very good. And we don't see a lot of new construction coming. I mean, rents still haven't fully recovered to peak levels, and construction lenders are wary about the long lead times to build projects. So we think the demand supply is going to be in good shape for at least the next couple of years.
Great. Well, David, thank you so much as always.
Thank you, Matt.
More on this and other REIT news and analysis, be sure to visit REIT.com.